Hello, welcome to Noble Electrolio. In particular, welcome to this session, a session aimed at simplifying the preparation of an income statement, which is normally called trading, profit, and loss account. Remember, it is called that because an income statement has two parts. The first one being the trading account, and the second one being the profit and loss account. To easily understand it, I'll first chop it into two parts so that we do them independently for easy understanding. Then finally, we shall join it. However, of the two parts of an income statement, nothing is hard because everything that we're going to see here, we've always done it in real life, either knowingly or unknowingly, but you've done it. However little or however small the business venture is, that business has practiced what I'm talking about, just as we are going to see. So, an income statement is that financial statement that indicates the financial position of the business at the end of a trading period. Remember, trading periods differ. We have different trading periods. Somebody may start calculating his or her trading period in January, the other one in April, depending on when these businesses kick off. So, whatever you balance at the end of the trading period, and you see, how much have I made as profit? How much did I put in when I was purchasing these items? Because the amount of money you put in, and whichever expense you've come on spending, you, at the end of the financial period, realize that according to what I put in, this is what I've realized as profits. What you've done is an income statement. Though you may not know, but you've informally done an income statement. There are those of you who have studied an income statement. We are going to remind ourselves. Those ones who have never studied, we are having a fresh start. For those who have studied and you still remembering everything, we might learn something new and something simple. Thank you. Now, imagine a situation. See these 3 bottles of wine? Let me assure you, this is someone's business venture, however small it may look. This is someone's business venture. This person has these 3 bottles in the shelves. This person is selling. What you see here are the 3 bottles of wine. When we come to business here, for us to say, these are items that the business is willing to sell off to the customers. The moment you have those items that you're willing to sell off to customers, we say you have what they call sales. So, to start with, we are looking at preparation, income statement. We've said it is that financial statement that indicates the financial position of the business at the end of a trading period. It is aimed at finding purposely the actual amount that you make as profits, the net profit. And we say it has 2 parts. One of the parts is the trading account. One of the parts is the trading account. Now, a trading account is the first part of an income statement. It is aimed at finding the wholesome profits, the wholesome amount of money that you make as profits. We are going to see what I mean by wholesome in the proceedings of the preparation. The trading account has components. When somebody asks you, no, you're talking about a trading account, what is it? It is the first part of an income statement whose aim is to determine the gross income of the business. I will say gross profit, however, there are also other incomes that a business gets, other incomes that a business receives, not particularly from selling items, but from other things as we are going to see as well. We look at the components of a trading account now. The first component will be the sales. It is the preamble that I gave when you look at this business. All items that are ready to be disposed of at a cost in business are called sales. So when you come here and they ask you what are sales, you say sales, they are value of items that are ready to be disposed of at a cost in business. So these 3 bottles in somebody's shelf become the sales. So in brief, somebody may say sales, this is the value of items ready to be sold off by the business, of course at a profit. No business that aims at selling you off at a loss will always sell off at a profit. Some other person may say, these are items. Why do I attach value? Because I'm going to prepare an income statement that requires values. We need the figures in particular. So, look at a situation now. That's the first component. Look at a situation. Assuming this entrepreneur, the owner of this small business, wishes to sell these 3 bottles to a certain customer. This customer comes, orders for the 3 bottles. After ordering for the 3 bottles, this customer wishes to get the 3 bottles looking very nice, no crack on the bottle, and everything is okay. And this entrepreneur does a very good job and makes the delivery to the customer. When this customer receives these 3 bottles, he realizes that on one of the bottles, look at this. Let me assume this is a crack now. It is not a crack as you see, but let me assume this bottle has a crack somewhere. After the delivery, this entrepreneur will write, I've made the sales of how much, assuming each bottle goes for 25,000 or 30 or any other figure. Now, if we assume each bottle goes for 30,000, this entrepreneur will say, I've sold 3 bottles worth 90,000. This person will record somewhere 90,000 as sales. Now, on realizing, the customer says, yeah, this guy has bought me wine and one of the bottles has a crack. He will give you a call. Hello, I'm sorry, of the 3 bottles you bought, one has a crack. Could you please come for your bottle? If the entrepreneur doesn't come for this bottle, the customer will take it back. If this bottle is brought back into the business, the entrepreneur will say, wow, I thought I had made a sale of worth 90,000. Now, this person has brought back a bottle of 30,000. So this entrepreneur is responsible to either give back the money to the customer so that this person can buy that bottle somewhere else, or give in another bottle, but just imagine this person doesn't have any other bottle. Implying that you have to give back someone's money. This bottle that they've brought back and you had sold it is what we call a return inward. A return inward is the second component. Returns inwards, or what some other people call the sales returns. They are returns on what we had sold. A return inward or a sales return is an item that was once sold but later returned into the business by the customer. So this is our return inwards. So you say these are items. If your purpose is finding the value, you say this is the value of the items that were once sold, but later brought back by the customers to the business. Now, you had sold this bottle, they bought it back. This is what we call return inwards. We so far have 2 components. One, we have the sales, which sales are items that are ready to be sold off. All items, you've oftentimes seen land for sale, anything for sale, house for sale. That one implies that house is being put in place so that it can be taken by any willing customer at a particular cost. Those are sales. When you talk about sales, you go to return anyone's. Return anyone's, we say they are items that were once sold, but later customers bring them back into our businesses. If we don't have replaced, these people claim for their money. That's what the second component. The third component is a result of the two. Is what they call the net sales. Is what they call the net sales. Now, the net sales, remember, we had sold 3 bottles. Now, 1 bottle was brought back. An implication that the total sales in that beginning, you had recorded 3 bottles. When they brought back 1 bottle, we actually sold 2 bottles. So we are looking at the actual amount of items, actual number of items, or the value of the actual items that we disposed of at a particular time. That's what we call the net sales. The actual amount realized from sales after deducting off return inwards. So we shall say net sales now is equivalent to total sales minus returns inwards. So wherever we are told to calculate net sales, we normally get that total sales, we subtract off return inwards all the sales returns. You see, you're now smiling, you say, I didn't know it is so simple. It is so simple. It's about realizing what are sales, what are done inwards. Then, how do I get the net sales? We are looking at the actual value of the items that we sold. This is what we call the net sales. Sometimes, net sales are also referred to as turnover. Sometimes we call them turnover. So if a question comes and they want you to calculate turnover, turnover is also referred to as net sales, or it is exactly equivalent to net sales. I'll give you an alternative formula for turnover in case you don't have return inwards. A question doesn't have sales, but somebody wants turnover, and yet I've said turnover the same as net sales. Imagine a question without sales, a question without return inwards. How do you go through about it? So I'll give you an alternative formula after telling you the other definitions of other components that come up with the formula that I'm yet to give. Now the third component. They are the purchases. In a business, we normally buy items in order to resell them and make a profit. Let me use the very bottles that I have here. These are bottles in someone's company, somebody's business. If I'm now the business person who is willing to purchase from an entrepreneur, I will go and say, how much are these bottles? Assuming they sell each bottle to me at 30,000, I'll make a purchase of 3 bottles, that will be 90,000, 90K. If I buy these 3 bottles and bring them into my small cash shop, I will not sell each bottle here at 30,000. No, because I bought it at 30. Remember, I put in some transport here as I'm coming. I will label a price tag here that is way higher than 30,000. These 3 bottles that I bought into my business for the sale to realize profits are what they call purchases. So purchases in this sense are items bought into the business for resale to make a profit. All items that you purchase with the purpose of reselling wherever you buy with the intention of reselling, we say you've made a purchase. Wherever you buy with the purpose of personal consumption, you've bought. But wherever you buy with the purpose of reselling and make profit, we say you've made a purchase. So purchases, these are items. In fact, I told you somebody can say, this is the value of items that are bought into the business for resale to make a profit. If you find someone saying these are items, it is also fine. It's also fine because these are different known figures themselves. The value of items. Somebody can say these value or these are items bought into the business for resale to make profits. Those are the purchases. So, look at the scenario. We'll say these are my purchases. Now look at this scenario. Assuming that the distance from here up to where my business is maybe worth the transport of 5. Look at this. Let me assume, I'm making an assumption here. Just an assumption. That, let me assume, the transport that I incur in transporting these items, these 3 bottles from this entrepreneur's business to my small car shop is maybe 10,000. Let me assume transport is 10,000. And you know, when you go to some businesses, there are those people that will always help you carry, do this and that. Let me assume, as I was packing this wine on maybe a van that I've used, I got some boys, energetic boys and girls, purposely at the given business center, and they loaded this for me on my cost. Assuming the wine was in a box and was loaded on my van by some other person, and I gave these people some little money, some little money for people to labor. This labor, for these people to help me. And if labor goes for maybe 2,000, just 2K, helping me put on my van. If these 2 I incurred, so we shall say the transport was 10K, this one is total of 12,000. On addition of the purchase money, because this is 90,000 now, since each bottle was 30,000. So the purchase money, each bottle here, we say, assuming it goes for 30,000. There are 3 bottles, so it is 3 times 30,000, giving us 90,000. Now, 90,000 purchase money. Wait for my question. There is a question that I want to ask you. So I will answer it, but I know you will have answered it also in your mind. Because you cannot give me a direct response, of course. Now, when you look at this, we have 10,000, we have 2,000. 10,000 is the transport. 2,000 is the labor for these people that helped me maybe load on the van. In that sense, I'm asking you a question. Assuming you come to this point, in my journey from where I bought these items, I come reaching here. Soon reaching where I'm going to go to the business, I find someone here says, no, can I please buy all you have at 100,000? Remember, you bought these 3 bottles at 90,000. You put in transport 10,000 for this van that you are using. Then the 2K for people who helped you on loading. That is the labor. Now this person, you find him here, all her, and says, no, I'm giving you 100,000. Can I have those 3 bottles? Would you give out the 3 bottles? I know your answer will be no. Now you're going to tell me, no. How about, the 100,000 I'm not making profit because of this 10,000 and the 2,000. Now my question comes back. Is this also purchasing money? Because you purchased at 90,000. Why is it that somebody is giving you 100,000 and you are rejecting? The reason is, in your mind, you are aware though this wine goes for 90,000, but there is this transport that you incurred of 10,000 and the 2,000 for the labor. All of these ones, you consider them as purchase money. And when you are labeling this bottle, the price, you will say, since this is 100,000 plus 10K for transport, here I'll be getting profits plus the 2,000. Here I have 100. So this is 100K plus 10,000, that's 110,000. You see? Now, there is this 2,000. You are very sure. Now you can say this bottle goes for 40, 40, 40, all of 50, such that you make 150K. When you get 150K, just 11,000, when you look at 10,000 plus 10,000, so 100,000 plus 10,000 and the 2,000, this money is way less than the 150 or less than the 150 in that sense, because your mind tells you you are going to be making the profits, so you become happy because you have the 100,000 with you, you have the 10,000 added on, then you have the 2,000 added on. So your mind will tell you that since this one 1 1, then you have 0, then 2 1 1. So you have 112,000 with you, so you become very happy. Why? Because when you get this minus this, you will get a profit. Why have I brought in transport and labor? Wherever we are looking for the total purchases of the business, please, money for transport is important. That's what we call money for carriage. Then money for the other labor, what we call a wage. Implying that as we are looking at the trading account being the first part of income statement, we shall talk about the first component as carriage inwards. The word carriage refers to transport. Now, all means transport. Inwards, the transport you incur in transporting goods from the entrepreneur's business or from the wholesaler or from the manufacturer to your destination. The transport you incur in bringing items into the business for sale is what we call a carriage inwards. The cost of transport incurred items from the manufacturer to the business premises. The business premises. That's carriage inwards. It is what we call the transport here. The transport, and carry transporting these bottles from where I bought them to my business. Now, we have the other one being wages or wage. The labor that I put here, the labor cost, because you remember they told you a wage is any payment for a piece of work done. Any payment for a piece of work done is a wage. If someone comes here and says, excuse me, would you please take these bottles for me to the other customer there, and I give this other guy 1,000, that is a transport cost. However, if this person is within my business and helping a customer, whatever this person does and the customer pays him, it is a wage, it is not a salary. I'm not paying him for anything in a period of time. So a wage is a payment piece of work done. Piece of work done. That is a wage. Now, if somebody asks for total purchases, we say that this is, I would call it 6, but let me leave it, and the 6th one becomes returns outwards. The good thing in your mind, you've known that when you're looking for total purchases, get the purchases themselves, get the money for buying these 3 bottles, add on the transport that you incurred, then add on the wage that you incurred in maybe helping you load this one. All of this become purchases. When you come returns outwards, sometimes they are called purchases returns. They are purchases returns. They are returns on what you have purchased. Do you remember this scenario of return inwards and return outwards? If you remember this scenario very well, then this one is another scenario that is very nice. Now, this scenario is no longer now the seller to the buyer. It is now buyer back to the seller. Wherever you buy items from a particular shop, the moment you take these items back to the person from whom you bought, they become returned inwards. Now, to you who is taking them back, they become returns outwards. Look at this scenario. Forget about whatever I've said previously. Now look at this new scenario. I repeat, it is a very new scenario. Forget about these other scenarios that I've talked about. Now, in this new scenario, Noble is the customer to the other business. Noble goes to this business and purchases these 3 bottles of wine and brings them to his cash shop. After bringing them, Noble realizes one bottle is not right, and Noble takes back. I'm talking about Noble, the customer. Noble takes back this bottle. Now, to Noble, he had bought into his business from the other entrepreneur. Now, to Noble, this is what he has purchased, but he has returned one bottle from what he had bought. So we say the other bottle to Noble is returned outwards. Why? Because he had purchased 3 bottles and is taking back one of the 3 bottles. So we are having a return outwards. So we say a return outward or return outwards. It is the value of items that were once bought into the business, but later returned to suppliers. It is now the customer that returning. It is now the customer that's calculating what he has returned to the supplier. Hope I'm a bit clear and you're not confusing it with returning inwards. I repeat, when you're talking about return outwards, you're talking about a customer scenario, a customer's quantity that he has bought scenario. So wherever you buy and take some items back from where you bought them, to you, they become returned outwards. To the person you are returning to, they become returned inwards. So hope I've not been so exaggerative and I've been clear. That's the best way I can talk of that. When you look at return outwards, we say this is the value of items. All these are items. You'll find someone writing it that it is okay. Only that I'm using the value of items because what I did is writing the value into the trading account. This is the value of items that were once bought, but later returned to suppliers. Returning inwards, they are returned by. We are returned to the suppliers. That return outwards. The 7th component would be net purchases. Now, if I had bought these 3 bottles here, these were the 3 bottles that I had bought, and I took back this one bottle as a customer. So it implies my total purchase were 3 bottles, and that was 90,000. Those are the total purchases. Now, if I took back this one bottle, it implies I'm getting the total purchases, which were 3 bottles, minus the return outwards. So, net purchases, it is the value of the actual number of items that have been actually purchased by the business. After deducting off whatever you've returned back. So we said net purchases, we give the total purchases, which were the 3 bottles. Now, we subtract off returns are outwards. What we've taken back, and that is the formula for getting net value. But remember, total purchases. You get purchases, add on, carriage inwards, add on, wages. Go back to the other explanation and ask yourself, why is it that at some instances, someone tells you, you know, I would have given you this bottle at 30,000, but just imagine, I put in my transport, I put in this, then try asking this person, is that also purchase money? No, you know, I incurred this cost, so I cannot say I'll be making a loss, yet the purchase money is 30,000, but it's giving you explanations about the transport this person incurred, implying that the transport cost increases or affects the final price of a commodity. Now, the other component will be opening stock. Opening stock. This is component 8. Opening stock. Only that today I came across someone who is just having a small business. That's why I'm using a fixed number of items. That's the size of the business. Now, opening stock. If I came in the morning, that's the business. I came in the morning. Hello, good morning. If this person has just opened, I'm saying good morning to the entrepreneur who is the owner of this business. If this person opens and I see 3 bottles that he has started with, then these 3 bottles becomes the opening stock. The amount of goods that someone has at commencement is what someone refers to as the opening stock. The opening stock. The amount of items you have at the start, at the commencement, as you're commencing that trading period, which amount of goods do you have? The value of those amount of goods is what we call the opening stock. If I came in the morning, found this person with 3 bottles of wine, and this person just starting this business, I will say his opening stock is worth 90,000. If at all he tells me that a bottle goes for 30,000, and that's the opening stock. Hope it has sunk into your mind. I don't want us to cram this. No. Why? It is real life. There are things that we normally do. None of you have not faced this so as long as you've operated some small business. Even when you are a learner, some learners learn when they are practically participating in business. So when you have this opening stock, as at commencement, you can say at the and start. That is the opening stock. Remember, we have 2 types of stock. We have the opening and the closing. There's something that is funny with this kind of stock. Just imagine, sometimes opening stock of some business becomes the closing stock. Somebody opens up a business, maybe, let me assume, I'm using a full day as a full financial period. Somebody opens up a business in the morning. When you look at the display, here's 3 bottles of wine. As you're coming back in the evening, you find the very same 3 bottles of wine. That one is an implication that what was opening stock is actually his closing stock. Why? Because of the items this person had, he never disposed of any. That's one funny bit of it. The other one is a closing stock. 9. Closing stock. The value of the amount of the items, that remain unsold in business is what we refer to as closing stock. If you have items in business that have not been sold off, when you find its value, the value that you get is what we call closing stock. The value of items that remain unsold in business is what we call closing stock. unsold. Now, that's the ninth component. I'm assuming each component that I'm talking about here, it is sinking into someone's mind, and we are not having time of even closing the eyes. Now, there's this, for this one, we just understand and say, okay, as I've been doing this, I've been doing this. As this one happens, this one is this. Because this is real life. We want to understand this in a very simple way, but very serious. So, the 10th component, we have cost of sales. Now, I have reasons for writing cost of sales last, or among the last. Reason: the cost of sales, its components are explained previously. Had I written cost of sales first, then I would have to explain these ones. I'm explaining cost of sales. The cost of sales refers to the actual value a business incurs in making purchases into the business. The amount of money that you incur in making purchases. When you make purchases, you bring items into the business. After making the purchase and bringing items into the business, these items become sales. That's why we say cost of sales. As a business, I normally have sales. But the cost that I incurred in having these sales standing in my business is what they call cost of sales. How much money do you put in to have those items in the shelves? How much money did you put in to have all those clothes in that boutique? How much money did you put in to have that machine running? How much money did you put in to have that business running? That's what we call the cost of sales. The cost of sales. The amount of money that is incurred in making all the total purchases and having the sales stand is what they call the cost of sales. So if somebody says costs and they say of sales, it implies the amount of money you incur in sustaining these sales into the business. And the cost of sales is normally associated with this formula. This part is a bit shallow. I hope it is okay if I can rub off here. I hope it is okay. It's very okay. And I'm very sure. But they don't get worried. We are going to do a trading account. If I leave this platform, trading account, it's very simple. Very simple. For as long as you understand this. The other one, as simple as eating your favorite dish. Now we say cost of sales. Cost of sales, we normally say the same as opening stock. Opening stock. We add on the net purchases. Then we subtract off the closing stock. Particularly this one is how we find the cost of sale. The cost of sale. You know what net purchases are, you know what closing stock is, and you know what opening stock is. Get the items that you start with, add on what I've purchased. If that is the case, please deduct off what remained unsold in the previous trading period. In that sense, you're going to find out what exactly the cost of sales are. This was the 10th. The 11th and the most important, because it is the core for the preparation of the trading account. Remember I told you, a trading account is prepared purposely for finding the wholesome profit of the business, the gross profit of the business. We are looking at how much money does this one make before you deduct off any expenditure. The amount you reserve on the purchases after making sales is what they call gross profit. So we have gross profit. Some people may say gross profit is the profit before deducting of expenses. I will say gross profit is that amount of money in excess of cost of sales. This amount of money exceeds cost of sales. Amount of money in excess of cost of sales before deducting of any expenditure. Let me give an example. Simple. I'm using your one bottle, just this one bottle. If, I'm handling it with passion. Now, when you look at this one bottle, assuming this bottle goes for 30,000, if it goes for 30,000 and I put in 1,000 for a border guy to take it at my place, or a Uber, or any person take it at my place, assuming this is where I stay. That's where my car house is, or my car apartment. If this person takes this bottle, my car apartment, the transport, let's assume it has been 1,000. This is the cost. Then transport is 1,000. I'm assuming if I'm selling this bottle, I'm now reselling it to customers, and I sell it at 35. If I sell it, finally, I sell that bottle, selling. I sell it at 35,000. The amount of profit that I realized when I bought this bottle at 30,000 and I'm selling it at 35. So I will say gross profit is equivalent to cost, because this is what I saw. The selling price, which is 35k, the selling price minus the buying price, which is the cost price, so 30k, and the balance will be 5k. This 5k is what we call gross profit. We don't think about this expense at this profit. Why? Because it's a wholesome profit before deducting of expenses. That's why some people say is the profit before deducting of expenses. That's why I may say this is the amount of money in excess of cost of sales. You see, before this money is in excess of this, but I've not deducted of any expenditure, and this is what they call gross profit now. When you go ahead and subtract 1k to say, but that I incurred a transport of 1,000. That one is another type of profit that we shall see very, very soon. Don't mind it. Hope for gross profit we are covered. So gross profit, we get the selling price, what we call sales now. We subtract off the buying price, which we call cost of sales. The amount that we directly remain with becomes gross profit. And gross profit is calculated by getting net sales minus cost of sales. If we are looking at just a trading account, the components are those. These are the components of a trading account. I'm very sure every person has assimilated these ones. I'm not talking about the other assimilation, the other assimilation of maybe the digestive system. No, I'm talking about assimilation as regards financial management. Please assimilate this and understand them. Now, how we prepare a trading account in particular. A trading account now in particular, the preparation. Before I start, financial accounts or financial statements, they normally have headings of 3 lines. Are meant to be 3 lines. Why? The first line of the heading is always the business name. The second line of the document is always the account name. If it is a trading account, if it is a profit and loss account, anything. The third line is always for the period. That's the time frame. That one must sink into your minds. So the format of a trading account. this is a vertical format, called a vertical format of preparation of a trading account. There is a T format, but let's opt for this. When you look at this format, the first column is always the details column. You put in the details of what you want to write. So this one will be the particulars or the details. You can call them particulars or details. When you look at these other columns, they are called amounts columns. These amount columns, don't forget, the amounts columns must be written with units. So if it is a shilling, put units here. If it is a dollar, put it there. If it is a pound, please. These are amounts columns. So these are units, units, units. Case study, somebody may write shillings, shillings, shillings. Somebody can write yen, a yen, a yen, depending on the currency a question is using. So first we have the cells. I'm going to use x-axis to represent the values or the price. Hope you still remember the other formulas that we've written. The cells, you put the sales amount, the sales value in the second amounts column. After having this, remember we said to get net sales, we get total sales minus return inwards. However, we don't write negatives and positives or signs in financial accounts. What you do, or financial statements, you say less. This less stands for the other minus. Less returns inwards. In this sense, you are writing the value directly under sales. The value you get, you say total sales minus return inwards. We say we get net sales, and the figure is put in the last column. This one we've done is what we say net sales equals total sales minus returns inwards. It is what exactly I've done here. After that, we less cost of sales. Remember, I've told you the major purpose of a trading account is finding the gross profit, implying that we are looking at gross profit as net sales minus cost of sales. Now we've gotten the net sales with us. So this minus here is this less cost of sales. Our purpose down is getting the gross profit. So we shall have cost of sales equals opening stock. Hope you can see opening stock. Put the amount in the second amounts column. Why? The first column we use it for initial calculations. This one for medium. This one is used for only final calculations. Opening stock. After adding opening stock, we are looking for cost of sales. Opening stock. It was here. Okay. On opening stock, we say add purchases because we are looking for net purchases. But net purchases equals total purchases minus returns outward. So we are looking for total purchases from the first column. Add the purchases. This is the amount. You add wages, assuming the question indicates wages. Then add carriage inwards. What you get here are the total purchases. And this is the value. I'm assuming this is the value for total purchases. After getting this, you say less. Now we want to get the net purchases. Net purchases here. So we say less. This less stands for this negative total purchases minus this one is what we represent as less. Returns outwards. This is the figure maybe. When you get total purchases and return outwards, you get net purchases. Which figure is put here. Those are the net purchases. Now, when you get opening stock, add on the net purchases. the figure we get is always called goods available for sale. Goods available for sale. You get opening stock. If this is A and this is B, goods available for sale equals A plus B. You get opening stock, add on net purchases. The figure you get is called goods available for sale. Now, when you have goods available for sale, it is where you less like a space. I'm going to assume that you're still moving down here. Say that I do one step down here and probably the last step. So this is goods available for sale and this is the figure. So if I start from goods available for sale, this is the figure, it is in the second column, this is the figure. I'm assuming you're following me very well. Goods available for sale, this is the figure. So I've just written it here for continuity. What you do, you say less closing stock. When you less closing stock, you're subtracting it from goods available for sale. And when you subtract off, you're getting closing stock, then you get cost of sales. I'm going to make it a little bit clear here. You get cost of sales. Cost of sales, getting opening stock plus net purchases. The figure that you get after adding the two became goods available for sale minus closing stock. When you subtract closing stock, what you get becomes cost of sales. Now look at the last column, where I told you we use it for final calculations. I know when you're having a piece of paper, you must have done this one vertical on the piece of paper, and in your paper you've not gotten an extension. On your piece of paper you're having, you've not gotten an extension, you're still moving vertically. When you see cost of sales, we go back to our formula. Net sales minus cost of sales is equivalent to gross profit. The net sales are here. I think them. Then minus, which is this less. Cost of sales, which cost of sales is opening stock plus net purchases minus closing stock, having cost of sales. Now we want to get gross profit. Gross profit equals net sales, which is this figure, minus cost of sales, which is this figure here. So you'll finally have this. If this was C and this is D, here we have C minus D. And that figure, this is cost of sales, and this figure here becomes gross profit. This figure here, which is C minus D, is becoming our gross profit. And that is a trading account. What we've seen is a trading account from the components up to when we've had a trading account. In the other session, we shall do an example of a trading account, and probably we shall do just one example of a trading account. In that very session, we do the profit and loss account. Thank you. Don't forget to subscribe and share with other people that may need this knowledge. Let us learn as we have fun. Let us have fun as we learn. Thank you so much.